Well, hi there. Rick Edelman here. Thank you so much for joining us for this very special webinar event, The Remarkably Easy Way to Allocate to Blockchain and Digital Assets. This event, I'm really excited about it because we do a lot of webinars here at DACFP, the Digital Assets Council of Financial Professionals. And I know you probably attend not only our webinars, but others as well. And increasingly, you're learning more about blockchain and digital assets, Bitcoin, and the entire world of NFTs and DAOs and DeFi and CBDCs and all that kind of good stuff. And you're certainly hearing about it more in the media. We're seeing mainstreaming occurring with advertising all over the place and crypto companies slapping their name on stadiums and hiring celebrities to appear in their ads. And you're getting more and more client questions about it as well. So I get all that. And here's the thing. And we're kind of guilty of this ourselves here at DACFP. A lot of the events that we stage, the educational forum that we provide, is really good at providing you education about, what is blockchain? What is Bitcoin? How does this stuff work? Teach me the technology. And it's important you learn that, which is why we spend so much time teaching it. But one thing that's been bugging me over the past few months is that it hasn't been made clear and easy to understand how to actually engage. I mean, we all know there's no Bitcoin ETF. And we also know that buying Bitcoin from an exchange is cumbersome and new and different, a little bit scary, client resistance maybe to this newfangled thing. There are private placements available for wealthy investors, but you've got those 2 and 20 fee schedules and K1s, and that's cumbersome in its own right. And you've got OTC securities, but they trade like closed-end funds with discounts and premiums and related features. And the Bitcoin futures ETF, but that's a futures product, which is contango and other issues. There's got to be an easy, simple way for you to fit this into your practice that is a way that your clients are familiar with a household brand name that everybody knows. And that's why we turn to Invesco to present this seminar. And I love the title, The Remarkably Easy Way to Allocate to Blockchain and Digital Assets. So I'm very happy that you're here, and I'm very happy to welcome our special guest, Ryan McCormack, who is the Factor and Core Equity Strategist for ETFs and Index Strategies at Invesco. Ryan, it's great to have you with us. Thanks for joining us on the program.
Thanks very much, Rick. It's great to be here.
Ryan, just to give you a little bit of a quick background on Ryan, you've got his full-blown bio up on the screen right there, but let me just share with you some of the details. Ryan manages, he's the core, the Factor and Core Equity Strategist, including their flagship, the Investor QQQs, and who doesn't know the Qs, as well as their newly launched Innovation Suite, and we're going to talk about that as well. You see Ryan everywhere. He's on Bloomberg, the Wall Street Journal, Financial Times, ETF Trends. He's a frequent speaker at conferences all over our industry. And he's got a prior background at Oppenheimer and Merrill, BA in economics at Johns Hopkins. So really glad Ryan is the guy for us to be talking about with all of this. And Ryan, give us a couple of minutes about Invesco itself. I mean, everybody's heard of Invesco and certainly the Qs, but give us a little more detail about Invesco.
Yeah, thanks. And I'm happy to, Rick. I mean, it's a little tough seeing that headshot. There's a little less hair on the top of the head, a little more on the face, but I guess the pandemic will do that to you.
I know the feeling.
But I think at Invesco we're a global leader, and I think as we get through the webinar, we'll have an opportunity to talk about maybe some ways that advisors can engage with their Invesco representatives, what those Invesco representatives can bring to the field, and certainly how they can help to expand the practice. But first and foremost, we're a leading global investment firm. We manage over $1.5 trillion in assets. We have teams all over the globe, and we really strive to be the most client-centric firm out on the street. Meaning that we're all about trying to deliver Investment solutions that work for your practice, whether that be in the realm of ETFs, whether that be in separately managed accounts, whether it just be practice management, mutual funds, the list goes on and on. That's what we're here to do. And we continue to try to expand our footprint, not only globally, but also in the investing universe. With a number of new ETF launches just this year, we continue to try to stay on the forefront of not only where the puck's been, but obviously where the puck is going.
Well, I appreciate that info very much. It's very helpful. Here's a slide that has a little bit more of a breakdown on the investment aspects, if you want to go into this a little bit.
Sure. So, of course, on the equity side, I think from an ETF standpoint, probably where we're most known, but, a very robust platform in terms of the open-end side. Fixed income and money market, we can talk a little bit later about some of the ETF offerings, notably the Bullet Shares suite of products that many of you may be familiar with, but also on the active management side, best in class in terms of our fixed income offerings. And then from there, of course, the balanced strategies, models, alternatives, including a very well-known real estate franchise. But, again, to further that point, as you look on the bottom, it's delivered through a very diverse set of investment vehicles, right? We wanted to provide the most options that we can, those options that will fit your practice and ultimately what your clients need and how they're seeking to invest.
Well, it's really fascinating to look at the incredible size that Invesco has become. And the thing, though, that really gets me, if I offhandedly were to say, gee, who would I turn to for information about investing in an easy way to allocate, to add to my client portfolio, blockchain and digital assets? I got to be honest with you, Ryan, I don't know if Invesco's name would come to the top of that list. I mean, Invesco incredibly, the Qs is what, the first or second largest ETF in the world at this point?
We're number 5 in terms of size, yeah, but second most actively traded in terms of average daily value traded.
And so, that clearly puts you folks on the map in an innovative way, but the Qs is not something that I would naturally associate with blockchain and digital assets. So, and I don't know if I'd put the word innovation in the same sentence as the Qs. So talk about the makeup of the Qs, because I think as big as it is, as prominent and common, everybody's heard of the Qs. I don't know that everybody watching this webinar is necessarily as well versed in this as we might assume. So let's start there.
Okay, we'll start very high level in terms of just what's QQQ, right? Because to your point, right, I think there are a lot of misnomers out there, and we're consistently trying to look under the hood as just to figure out, what does make this, what does make this ETF? What are the drivers? How are these companies able to remain so successful year in and year out? But for starters, right, I think if you are a CNBC watcher, I challenge you to go 5 minutes without seeing a commercial for QQQ. Those of you that are sports fans may recognize it as the official ETF of the NCAA, and Invesco as the official asset manager of the NCAA. You've seen a number of ads during March Madness last year and this year's college football season. We joke that QQQ would be on the Mount Rushmore of ETFs. Not only, Rick, because it's the 5th largest ETF listed, the 2nd most actively traded, as we discussed, but we have 22 years of live track record, which is something that not a lot of funds can boast. And a lot has changed over those 22 years, right? A number of different presidents, recessions. I mean, the fund itself could go out there and legally buy an alcoholic beverage. But I think with that, you've seen the tremendous acceleration of the digital age. And the holdings and makeup of QQQ and the index that attracts the NASDAQ 100 have been tremendous beneficiaries of that incredible, speed up of the digital age. QQQ again tracks the NASDAQ 100. Quite simply, that is the 100 largest companies listed on the NASDAQ exchange, ex financials. So right off the bat, there's no financials included, which I think kind of nudges it over to the growth side of the spectrum. I'll get out in front of this question as I usually do. Why are there no financials in the index? Back on January 31st, 1985, when the NASDAQ 100 was launched, concurrently, NASDAQ launched the NASDAQ Financials Index, which at the time was actually the one believed to have the more robust demand from an investment standpoint. So, this is kind of one of those examples where it may be better to be lucky than good. But almost by happenstance, you saw the NASDAQ 100 kind of blossom into this preeminent large cap growth index, and QQQ as one of the preeminent large cap growth ETFs in the world. Now, I said the word misnomer before, and I think it's important to note what QQQ isn't. And it is not a technology fund. That's still.
Well, it's important you say that, because when you say that it's X financials, and therefore it leads toward being a growth fund, my natural inclination is, well, therefore it must be loaded with tech. If it doesn't have financials in it, it's got to be the FANGs, right?
Correct, and to a certain extent, yes. I mean, I think in terms of sector representation, yes, the largest representation is tech, but you have a very robust allocation to consumer discretionary, to communication services. You have some healthcare in there, and a little bit of a differentiated view on healthcare, right? So you're looking more at biotech, more medical devices, rather than looking at your S&P 500, your traditional medical providers or large cap pharmaceuticals. But I say this is a misnomer because I think inherently, because QQQ was around in 99 and 2000, a lot of times investors, particularly those of us who have been around for a little while, immediately go back to, okay, this is the tech bubble 2.0. This is the tech bubble popping, right? So while it was still around, while QQQ was around then, the technology allocation, number one, was much higher. We did get a little bit of help if you look from a GIC standpoint from their reclassification. But I would argue that it's become harder and harder to put companies in a designated technology box. Right? Companies have adopted the use of technology. I mean, look across the scape of healthcare, bioinformatics, gene mapping, gene sequencing, the use of AI in diagnostics. The list goes on and on. An example like Tesla, right? Is Tesla a car company? Are they actually a technological components company when you're looking at their infotainment system? Are they an AI company with autonomous driving? Are they a utility because of the battery technology? So these are just a handful of examples that sort of paint this picture that it's very hard to take a company and just say, okay, you're tech. Let's put you in this predefined box. Because frankly, if a company hasn't really adopted the use of technology, if it's not dead on the vine already, it's likely forthcoming. And you have examples across, supply chain. You have examples across the oil and gas industry that, the technology has fundamentally changed the way that these sectors do business. But I think it is important to note that within QQQ, you do not have exposure to financials, as we said. You do not have exposure to energy, to materials, to real estate. You're underweight utilities and you're underweight industrials. So sorry, go ahead.
So you're talking about innovative kind of companies, and so I want to deviate for a second and come back, because I want to come back to how this affects the Qs. Talk about the innovation element and the innovation suite that Invesco has created. Why did you create it? What is the goal of it? How is it impacting the ETF management?
Sure. So I think in general, when you look at innovation, I always like to say that it's a bit of a nebulous term. You can't really quantify innovation by saying, okay, let me look at this company's balance sheet, or let me look at this company's earnings report and find that innovation metric, right? Because it doesn't really exist. So I think from our perspective, we have to kind of peel the onion back a little bit and say, all right, well, how can we call this company? How can we call these companies that make up QQQ innovative in nature, beyond your examples, right? And there are many of them. Amazon rising to prominence as an online book retailer, then morphing into a supply chain giant, and now, of course, the cloud service provider that we all know. The pandemic, something like DocuSign, right, revolutionizing the way that we e-sign and signatures on important documents and the like. Um, so, we can say through these examples, and there are many of them, that innovation kind of exists within these companies' DNA, but how do you quantify them? Or how do you quantify that innovation? And the first step for us quantifying that innovation is looking to a company's commitment to research and development spend. So we think that the companies that have this commitment to investing in that R&D, it sort of fuels this innovative nature, and success. And what we found is QQQ companies, they spend considerably more than their counterparts on research and development. So, to put some hard numbers on it, looking at QQQ against the S&P 500, in 2020, the average company within QQQ spent $11.5 billion on R&D. That's relative to the S&P 500, which on average, those companies spent $6.5 billion. Put it a different way, as a percentage of sales, QQQ companies on average reinvested 10% of sales back in their businesses through R&D. That's versus 7.1% for the S&P 500. But okay, so seems like considerably more. But we have to remember that many QQQ companies are in the S&P 500. In fact, 79 of them, they make up 42% of the market cap of the S&P 500. And that's up from 11% of the market cap of the S&P 500 15 years ago. So what we're seeing is QQQ companies are playing a larger role in the S&P 500 and frankly, the economy as a whole. You look at, sales growth across different industries, it's largely been focused on technology, on consumer industries, and away from your traditional kind of capital intensive oil and gas, materials, et cetera.
All right, so you're making a strong case for innovation and for growth and explaining Invesco's focus there. But now the elephant in the room question, Ryan, so what does this have to do with blockchain and digital assets? Explain, now connect the dots. So we understand QQQ, one of the biggest, one of the oldest, one of the best known. We understand the focus on innovation. Invesco has a long track record there. Now talk about the connection between QQQ, blockchain, and digital assets.
Sure. So when you're looking at, we think R&D is kind of the fuel, right? This is our first step in quantifying that innovation. What do you get for that enhanced R&D spend? And we looked at with our partners over at NASDAQ and a company called which is sort of an AI-based research firm out of Northern California. We looked at patent contributions across a number of different disruptive technologies. Right, so ones that are sometimes a little bit more mature, like cloud computing or big data, versus stuff that's a little bit newer, like human augmentation, et cetera. But in this instance, we can kind of quantify the linkage between this R&D spend, what does it lead to, and specifically in the patent world, kind of where do those patents lie? And as you look at the patent data that's most recent, which is the 12-month period that begins May 31st, 2020 through May 31st, 2021, what you find is these QQQ companies do have a significant footprint when it comes to investing to digital assets and blockchain. For instance, in the world of digital currency, 10 NASDAQ 100 companies have filed at least one patent. And collectively, those NASDAQ 100 companies have filed 19% of all patents relating to digital currency in the observation period. Next would be blockchain. 19 NASDAQ 100 companies, or companies within QQQ, have filed at least one patent. And collectively, those QQQ companies have filed 13% of all patents relating to blockchain in the observation period. I kind of put this one on the side because it is a little bit on the fringe, right? It's maybe a stretch, but when you look at something like mobile payments, 24 QQQ companies have filed at least one patent, and collectively, QQQ companies have filed over 18% of all patents relating to mobile payments. So, I think what's interesting is that they're not as directly tied to, let's say, digital assets, certainly on the mobile payment side. But I think the argument can be made that this infrastructure is still being built. The continued advancement of both digital currency as well as blockchain technology and beyond that, its applications is substantial. You look at the companies like Alphabet, like Microsoft, like of course Amazon Web Services. They support broad segments of the cryptocurrency universe. These companies are creating value for both their partners as well as their customers. And then you have kind of the more direct linkage, like a company like Facebook or now Meta, and their development of Diem is both a payment system as well as a cryptocurrency. So you look at sort of the contribution from a patent perspective, and those numbers are pretty considerable. And you start to look then at the companies themselves, the dollars behind them, and these companies' continued commitment to research and development and staying ahead of a lot of these transformative themes. And you can kind of see how, as we progress further and further away from the early innings to the mid innings, that these companies likely will have a very large stake in the world of digital assets.
So are you saying that one of the investment theses for QQQ is its exposure to blockchain and digital assets?
I think it has to be. Going back, Rick, and I think it's interesting, particularly on this patent slide or this patent data, excuse me. And I'd referenced it earlier, right? There are some themes as defined, like cloud computing or big data, right? That they are a little bit more mature, right? And stuff that is still getting off the ground. Okay, it's not as meaningful of a contribution to companies' bottom line, but the notion that these companies consistently have this consistently foster this culture of innovation and kind of long-term investment, not only in themes, but in the companies themselves, we think is kind of their patience here has led to kind of the performance that we've seen, as well as real fundamental growth. As we look over the last 10 years of QQQ, this is a story of fundamental growth, not necessarily kind of multiple expansion. So looking at the last 10 calendar years from a revenue perspective, right, QQQ companies or QQQ on the whole has grown revenues by 10.5% on a CAGR basis. That's against the S&P 500 at 3.6%. On an earnings perspective, it's grown at 11.2% CAGR versus the S&P at 4.2%. And then you have the dividend picture, where QQQ has grown at a 20.1% CAGR over the past 10 years versus the S&P 500 at 9.6%. Now, go back 20 years ago, right? Number one, if I had told you that half of the companies in QQQ were going to pay or increase their dividends, chances are you'd probably laugh in my face. But again, this culture that these companies have, the long-term vision to foster a number of these themes, I think is what's driven this fundamental growth. And they've been able to monetize this to the tune of returning value to the shareholder, in this case by dividends, and many of these companies are engaging in pretty substantial share repurchase programs. But that's a way to return value to the shareholder that traditionally a growth company had not. So I think the fact that we're seeing significant investment from these heavy hitters in technology like blockchain, in technology like digital assets, I think it's very clear that from their eyes, they're looking at it as a very meaningful portion of their growth going forward.
So I've got a few more questions, a lot of them actually, but I'm also starting to get pinged from questions in our audience. And if you are watching this and have questions, just go to the Q&A button at the bottom of your Zoom screen and type in your question, and we will address it here as well, because people's heads are starting to explode here, Ryan. And some of the early questions that we're getting are kind of the where I wanted to go next, which is, are you suggesting that QQQ is a vehicle for investing in blockchain?
I think to a certain extent, yes. And when we're looking at an easier way to do it, right? As you had alluded to before, it's difficult to get exposure to digital assets broadly. It's cumbersome. An ETF like QQQ that's been around for over 20 years and is widely on pretty much every platform out there. I think it lends itself to kind of an easy way to get exposure. Now, I kind of look at it as a multi-theme strategy. By no means, excuse me, am I advocating that QQQ is blockchain or digital assets only. Right? I'm looking at this as a way to get exposure to multiple transformative themes that are out there, and a large one being that world of blockchain as well as digital assets. Beyond the patent data that we looking at sort of thematic overlap with various indices that are out there, right? These QQQ companies have exposure to things like 5G, like things like, of course, big data, as I had mentioned, robotics, AI. I mean, it really is kind of investing and in sort of the most transformative themes that are out there, the most transformative technologies. And the size of these companies, of course, because they're putting their stake in the ground, it isn't a pure play because they're kind of invested across the
Well,
technological scope.
this is related to the next question that I want to hit you with, which is coming from our audience, and they're like, wait a minute, isn't the whole premise of crypto and DeFi, Web 3.0, the Internet of Money, isn't this the whole premise of all of this to be a shift away from the core centralized business models of many of the leading companies in the QQQ? So isn't there an inherent contradiction to this?
I don't know about a contradiction. I mean, I think when you're looking at sort of the technology that does fuel a lot of this, right? I mean, it's born from QQQ companies. Certainly, as I had alluded to, Amazon is a very large player. I mean, you can't really get away from the fact that these large companies, whether it was designed to be kind of a shift away from or kind of decentralized away from that sort of model, the very fact remains that these companies are investing in that notion and certainly powering the technology behind it. There's already a number of different examples with these companies. So although again not necessarily a pure play directly into digital assets and blockchain on the whole, it certainly gives you exposure to kind of where this whole notion is going as these companies continue to invest in it.
So in other words, what you're really saying, this is a picks and shovels approach. You're not investing in digital assets directly. You're not investing in a blockchain startup directly. You're investing in the companies that are doing the R&D, building the infrastructure that's letting those companies do that. And a picks and shovels route is, clearly an established investment methodology, pioneered, so famously by Levi Strauss. Don't mine for gold, sell the gold miners blue jeans. That's kind of what you're suggesting here. But is this the only way, the QQQs, is this the only way that Invesco is providing exposure to digital assets among your suite of offerings?
Well, from an Invesco standpoint, no. I think when we look at the easy way, because of QQQ's long established track record of over 20 years in the market, again, approvals across all different platforms, it does make it a way to allocate somewhat effectively, for the least common denominator, kind of approved across the board. I think Invesco, and we can talk about this, sort of where Invesco ETFs has sort of lived over the past number of years, but we've started to see, much more adoption on the thematic front, and thematic in plain English would be, kind of things like blockchain and crypto assets. So we launched two different ETFs just earlier this fall on October 7th. The first is the Invesco Illyrian Galaxy Blockchain Users and Decentralized Commerce ETF. The ticker there is BLKC, kind of blockchain. And the second is Invesco Illyrian Galaxy Crypto Economy ETF. The ticker there is SATO, a little homage to Satoshi. Both launched again earlier this fall. So because of how new they are, because of how limited that track record is, because of we've only had about a month and a half to gather assets, they haven't shown up across all platforms out there. So while it's a more direct way to engage within the digital asset space, I think we led here with QQQ just because you want to appeal to the least common denominator, where you're not going to run into some of those issues with it being available on various platforms.
Well, I would assume, though, that given Invesco's size, might, history, reputation, success, that the companies, the broker dealers and the investment companies and the independents, everybody from Schwab and Fidelity to the Merrills of the world, they're not going to have any problem putting SATO and BLKC on their platforms, making them available to advisors. But it is a process nevertheless. You've got to go through the company's due diligence efforts. It's got to go through risk and compliance and legal. And then it's got to get introduced into the marketplace through sales, marketing, and distribution. Takes a while. But the fact that Invesco has created these two ETFs is really noteworthy. And so what you're basically saying is we're giving you options and choices. If you want a blockchain specific vehicle, well, you've got it. If you want a digital assets proxy, you've got it. If you want merely to incorporate this new theme in a broader theme of innovation and growth, it's in the most established ETF on the marketplace, QQQ. That's kind of, I'm putting words in your mouth, but is that kind of what you're saying here, Ryan?
No, that's it. And I think that's going back to kind of how we started the webinar, right? Is we are trying to give whatever options that we can. And I think that was a perfect summary of it. It's trying to provide a more robust toolbox and tools within that toolbox for you to go out for your clients.
So give me a little more. I want you just to say it again for folks and provide a little bit more of elaboration on the distinction between SATO and BLKC, SATO, SATO, SATO and the blockchain ETF. Just because advisors are often saying, which fund do I pick, and how do they differ, and so on.
Sure. So, at first, right, I think the view here is to try to gain access, right, the growth of the overall kind of ecosystem of digital assets. Now, for the most part, the majority of exposure will be investing in companies that operate across those various functions, right? So you'll have exposure to miners, right? Obviously, I think it's very well established, and
companies like Riot Blockchain, Marathon Digital.
Exactly, right, and certainly you look at the revenues there, the growth is substantial. Beyond that, then you have companies like digital asset buyers, right? So companies that are reporting Bitcoin as treasury assets, right?
Like MicroStrategy.
On their balance sheets. From there, you have the kind of facilitators, the enablers, so to speak, the companies that are buying, selling, and transferring cryptocurrency assets,
like Coinbase.
And then finally, you have beyond that, I think kind of within that that same realm would be semiconductor companies, custodian companies, and then beyond that, this is sort of an offsuit, would be the trust, right? So trust or ETPs, at least 75% in cryptocurrencies, and investment products that are linked to cryptocurrencies. So within both of those strategies, you're going to have exposure to those types of names. The main difference between SATO and BLKC would be that BLKC holds blockchain users. So in this regard, we're looking at companies that have engaged in kind of the development of blockchain technologies that are for uses outside of the realm of cryptocurrency. Names like Salesforce or IBM or Oracle, Cisco, etc. So that's really the main differentiator.
So for example, they're using blockchain technology as a supply chain solution, as a transmittal solution, as a IP protection solution, and so on.
Correct.
Obviously, those two ETFs, because they're so intently focused in the digital asset space, are going to be 100%. How many different securities typically would you find in those two ETFs?
Yeah, so the 45 holdings that are within SATO will also be within BLKC. BLKC has an additional 20 that kind of fall in that blockchain users. So 65 holdings within BLKC.
And both of these are smaller than QQQ itself.
Yes.
So what percentage of QQQ would you say has a blockchain digital asset theme?
So I think when
in terms of the number of companies.
Yeah, probably in the realm of 20%. of QQQ,
So
20
that's
to
a pretty
25%.
meaningful amount. And the reason that that's a big deal, you say, well, gee, if it's only 20%, why don't I just go buy, SATO and BLKC, which is a perfectly reasonable thing to do as well for a direct exposure or allocation. But let's keep in mind that QQQ is a much bigger, more diversified investment. I can envision somebody having 10 or 20% of their assets in a NASDAQ 100 index fund. I'm not sure you'd put 20% of assets in a digital asset index fund. So if you did have 10% of assets in Invesco's QQQ, that's by definition giving you 2% exposure here. So it's a wonderful, easy way to have a small allocation without the fuss and muss of a separate investment purchase.
And I think it's incorporating that into, to your point, Rick, is right. QQQ is used widely as a large cap growth holding, right, within long-term asset allocation. This is a way to incorporate that. And if you want to go a little heavier on the digital assets or blockchain side, you have the ability to do that. But to your point, right, I think when you're looking at long-term asset allocation, most would probably gravitate towards QQQ and getting sort of that supplemental exposure to digital assets through there. And then, if you want to be a little bit more targeted, you have a number of different options where you can go ahead and do that.
So we're getting a lot more questions of people want to learn more about SATO and BLKC. How often are those holdings reviewed? You said that there's 45 in one, 65 in the other, roughly. How often do you review those holdings and rebalance them?
Yeah, so that's looked at on a monthly basis.
And do either of these funds hold GBTC?
I believe they do. They both do.
And that would seem to make sense. GBTC being the biggest Bitcoin proxy, as an OTC security. It's a very common holding for a lot of folks. The world of ETFs is big and getting bigger. So what do you see, Ryan, are the interesting trends out there that you're paying attention to or looking forward to?
You mean besides a physically backed digital asset ETF, right? That would be. I mean, right? I think we're moving that way. I mean, I think the excitement there is continues to build. Right?
That's that's the holy grail. Everybody can't wait for a Bitcoin ETF. There was a lot of false start with the Bitcoin futures ETF. Talk about, in fact, Invesco's position on the Bitcoin futures ETF.
Yeah, no, I think it's something that we looked at, and we're looking pretty consistently at various ways to gain access to different themes, and I think from our perspective, it's certainly not out of the realm of possibility, and it's something we're looking into, but at the moment we don't have one. When you look at ETFs, and I think this is interesting just because of all the attention that's been put on stuff like a physically backed Bitcoin ETF and the ability to get that futures product out there. The growth of the ETF ecosystem in general, I think, has been extraordinarily exciting. It's been the democratization of investing over the past 15 years. Investors now have the ability to get very targeted exposure to strategies, to themes that I think years ago would have been reserved for institutional investors only, and for a pretty hefty price tag. So all the efficiencies that have been brought on, the innovation across the scope of the ETF landscape, I should say. I think really has democratized that whole arena. I'm excited for the growth of active strategies within an ETF wrapper. I would say that that's something that's also very much in the early innings. You're seeing some fairly large scale conversions. You are seeing some new launches. I think the opportunity in the space is massive, but I think as you're looking towards just plain dollars, we're still very much in the early innings. But I think as we continue to progress, that's one thing in the world of ETFs that I'm very excited for.
And I think in particular, this category of digital assets lends itself to an active management environment, more so than many other asset classes. The volatility, the introduction of new coins and tokens, I think that there is a place for that for consideration. So I'm really excited to hear that Invesco is thinking in that way. I just want to elaborate on the Bitcoin futures ETF. I think Invesco has made the right decision by pausing on its notion of introducing a Bitcoin futures product. This was, at first, everybody thought, wow, great, the SEC is finally saying yes. And we saw the very first futures ETF raise $2 billion, $1 billion in 2 days. It was a hugely successful launch. But then the fifth ETF company launched a Bitcoin futures ETF. In the first 2 weeks, it raised $9 million. I think everybody who wanted the product got the product, and it's now kind of leveling out. And it's because we're beginning to remember, not realize, we knew it, we just kind of, I think, forgot in the hoopla of a Bitcoin futures ETF, that Bitcoin futures are not the same thing as Bitcoin. We don't generally, I say we in the advisory community, generally don't recommend to our clients that they buy stock futures or stock options. They're a niche product for a specific kind of investor or trader dealing with a specific strategy, and isn't necessarily a proxy for buying the underlying asset or security. And this is putting everybody kind of back to the drawing board of saying, when are we going to get a Bitcoin ETF? And the question has come up 5 times in this webinar from folks watching this event. They want me to ask you, Ryan, when is the SEC going to say yes to a Bitcoin ETF? It's the #1 question everybody always asks. I'll let you answer it, and then I'll add on 2 points to that.
I wish I had an answer, Rick. I really do. I don't know. It depends on what you read. You have a number of things out there that we could potentially see one in 2022, and what a nice New Year's gift that might be. But you have others that say maybe never. I think it's probably somewhere. This is the view according to Ryan. Probably somewhere in between that. But yeah, I mean, I think anytime you're waiting on something like the SEC to approve, right? Sometimes it goes quicker than you'd expect, and other times, like Bitcoin futures, it moves a little bit slower.
So I'll give you my take on it. 2 answers. #1, my prediction is that we'll have the SEC approval within 18 months. And I've been saying that for 7 years. So, who the heck knows, to your point, Ryan. Second, more importantly, we do not currently have a Bitcoin ETF in the United States. They are in Europe, they are in Canada, and they are available to US investors from the Toronto Exchange. That's a whole different cumbersome thing in and of itself. But that means, for the moment, here in the US, we don't have a Bitcoin ETF. We know we want one. We know it's the holy grail. We know it's so easy to use and familiar to clients, inexpensive, all that kind of good stuff. It doesn't exist. And we have no idea when it's going to exist. And in the meantime, Bitcoin's price has continued to rise. It has gone from $3,000 3 years ago to nearly $60,000 as of this recording. How much longer are you going to wait? While sitting, waiting with stamping your feet, holding your breath, and jumping up and down, demanding a Bitcoin ETF and not investing in this asset class until that product exists, how much more of the price appreciation are you going to miss out on? Are you going to let your clients miss out on? It's not a perfect world. There is no perfect product. So we need to go with the available products that do exist, as imperfect as though they may be, because doing it in a cumbersome or incomplete way is better than not doing it at all. And when you see products such as QQQ, SATO, and BLKC, it gives you the opportunity to engage without having to sit on the sidelines for something you may be sitting on the sidelines for a very long time. By the time there's a Bitcoin ETF, who knows what the price of Bitcoin is going to be? It might be 100,000 by then. It could be more. So how much longer are we going to wait? We've got to get off zero and get on with it with managing assets for our clients, even if it ain't a perfect world. I don't see much of an alternative.
And that does kind of bring us back to kind of what we spoke about earlier is even, if and when that does get approved and launched, the ease of investing there, right? What kind of hurdles from a regulatory, from a firm driven perspective will it take to, to kind of get widespread approval and adoption there? So just another kind of speed bump or monkey wrench in the road to have to contend with.
So two other questions related to Invesco that folks have just asked. Number one, talk about the fees of all three of these funds.
Sure. So for BLKC and Sato, 60 basis points. For QQQ, the expense ratio is 20 basis points. Now, I'm going to go off a little bit on a tangent, if that's okay with you.
Sure.
We did launch what we call an expansion to our innovation suite last year. We had another edition this year, but I'll talk about last year's edition, where we launched QQQM. There's going to be a lot of Qs, so warning ahead of time, which is the NASDAQ 100 ETF. And the second is QQQJ, which is the NASDAQ Next Generation Index ETF. Now, some of you may be asking, well, doesn't QQQ also track the NASDAQ 100? What is QQQM? Why would you launch that? It is true, they both track the NASDAQ 100. They will have the same holdings and the same weightings. The big question then becomes why? Well, off the bat, not everybody knows this, but QQQ is structured as a unit trust. I like to say there's nothing weird about it. It was just a more popular structure back in the 90s when the fund was launched. And not to give a competitor airtime, but SPY, which happens to be the largest ETF listed, is also an example of a unit trust. So, within QQQM, we kind of launched it through the lens of this may provide additional benefits for the retail-driven investor, the long-term buy and holder. And what I mean is right off the bat, QQQM is offered at a 5 basis points expense ratio reduction. So 15 basis points for QQQM versus 20 for QQQ. Beyond that, launching QQQM in the ETF, I think affords a little bit more flexibility within the product. And what I mean by that, number one, would be QQQM at the fund level has the ability to reinvest dividends. So quite simply, as we get a dividend from, let's say, Microsoft, within QQQ, we have to hold that in cash off to the side until our declared distribution date, in which case, of course, it gets distributed. Within QQQM, as that same cash comes in from Microsoft, the portfolio manager can reinvest it back into the index. Again, until our declared distribution date, in which case it gets distributed. But effectively, that helps to mitigate some of the cash drag that exists within the QQQ portfolio. Now, I talked about the dividend growth before and how we're looking at a 20% dividend CAGR over the past 10 years. Chances are most of you would not be buying QQQ or QQQM for the dividend yield anytime soon. Right. So that cash drag is relatively minor. But what I like to say is in up markets, what you could see is a basis point here, a basis point there of added performance. And over the course of a retail-driven long-term investment, those basis points can start to add up. Separately, QQQM in the ETF wrapper has the ability to engage in securities lending. So quite simply loaning out shares of the underlying stocks that we hold, of course, for a fee, which increases revenue for the fund, and that revenue gets passed down to the end investor by way of further expense ratio reductions. And then lastly, the fourth and final difference would be QQQM is offered at a lower NAV. A little bit more accessible to, let's say, the self-directed investor, maybe a little bit easier to implement across a model portfolio. But again, through the lens of more retail-driven buy and hold in investors. I would like to be abundantly clear. As of this morning, QQQ had assets of $206 billion. It is not going anywhere. QQQM is not here as a replacement. It's for another option for the retail-driven investor. I think QQQ serves an incredibly important purpose out in the marketplace, specifically for those sort of institutional block trading type transactions. You can rely on very tight trading spreads, tremendous secondary trading volume if needed to source there, for very large transactions to be done very efficiently and immediately, without the use of necessarily a trading desk. So again, not a replacement here, just another option at 5 basis points cheaper with some added flexibility.
This other question is going to sound like a softball, but I know where the person asking it is coming from. What kind of advisor support do they get from Invesco? And I know the reason they're asking. Most products available today in the world of blockchain and digital assets are being provided by what I'll call the crypto community. They are not coming from the traditional Wall Street financial services sector, the big behemoths of Invesco and all of your able competitors. So a lot of folks, when they are engaging in this space, advisors are finding themselves saying, I'm dealing with a new asset class, I'm dealing with a whole new terminology and the need to try to explain this weird thing to a client, and how do I efficiently open an account, manage assets, rebalance assets, report on assets, et cetera, et cetera. What kind of sales and marketing literature is there? What support do I get from the fund company in helping me win business, keep business, et cetera, et cetera? And in the crypto community, they're generally not able to answer any of those questions very well because they themselves are relatively new companies. They've only been around, and for most of them, a few years. So answer the question coming from Invesco, what kind of advisor support is available?
Sure. So let's start maybe with sort of the digital asset side, Rick, and then we can kind of expand, because honestly, there's a ton of advisor support, and you and I could probably do an hour on that alone. Not that we would want to, but we could. So I think when you're looking at things like Sato and BLKC, we have a separate thematic ETF team that can walk you through, if you want to take a deep dive specifically on the funds, if you want to do, look at various holdings, if you just want some commentary, if you want to look at the mechanics behind the ETFs, they are able, willing to jump on calls. They participate in webinars across the street. Beyond that, we have a sort of digital asset primer that's been released by one of our kind of global market strategists here at the firm. I believe she's updating that at pretty regular frequency. So you have some basis in terms of a primer, as well as sort of some forward-looking kind of what does the world of digital assets look like? What does cryptocurrency look like? What are the new advances in blockchain? So, on those things specifically, we have advisor-driven support, and all of that kind of flows through Invesco's senior advisor consultants, which are our distribution force that's out in the field. They're spread across wealth management, RIA, private client, retirement. It's a very seasoned, tenured sales force, a ton of their disposal, whether it be to the ETF team, whether it be to the investment teams, whether it be to the portfolio management folks. So a ton of resources specifically devoted just to the world of digital assets. Beyond that, we've really kind of staked our flag in the ground to again be that client-centric firm, where we're looking at a separate consulting arm that Invesco offers for practice management. Really just looking to, of course, create more capacity, better serve your clients, and really optimize the way that you do business with your clients. It's broken down in four main areas: new business development, wealth management, client service, and practice management. And this is all under the umbrella of Invesco Global Consulting, the kind of group that will proactively engage you to the extent that you want. Right? If you want practice management, if you want to look at specific kind of problem areas and how they've been addressed. So, they can handle that both virtually, both in person. I mean, it's all facilitated, again, through the senior advisor consultant, but, they have got presentations around common challenges of advisors' practices. They have customized workshops where they'll look to refine your practice. They'll go with the comprehensive consulting route, where they'll look kind of in-depth discovery at your practice, where there may be blind spots, where they can help improve the efficiency, where they can help kind of find out where your time should be devoted to, and kind of give you the tools to get you there. So a number of different workshops, again, that's very deep rooted in research. specifically kind of work that looks at emotional responses to language. So kind of keywords and creating marketing pieces, how to close meetings, winning boardroom presentations, and the list goes on and on. So, I think at the start is to reach out to your Invesco senior advisor consultant to kind of guide you in terms of where the resources are. But again, from a digital assets perspective, we have plenty of resources devoted to that space. From a practice management standpoint, we have a whole separate arm that can kind of help you, address some of those common pain points that exist.
Well, this has been terrific information, Ryan. I think that this is not a perfect solution, but Bitcoin, digital assets, blockchain is an imperfect world. And as advisors are struggling with how do I learn more about it, how do I provide product that is easy to access, understandable by the client, low in cost, high in transparency, I think it would make a lot of sense for advisors to consider this set of offerings between QQQ, SATO, and BLKC as an incredibly easy way to add blockchain and digital assets to a client portfolio. So I'm glad you were able to provide that info for us. Ryan, thank you so much for joining us on the event. I really appreciate it.
Thanks, Rick. It was great.
And let me also tell you that we have other events coming up here at DACFP on January 5th, brand new at the start of the new year, The Silent Killer, the biggest threat to financial advisors and how you can protect your practice, featuring Rubicon Crypto CEO Greg Johnston. And then June 8 and 9, mark your calendars right now. It's a live event in person. It's our first event that will not be virtual. The annual DACFP Vision event. Our first two Vision events were virtual during the pandemic. We're going back live. It's going to be in Austin, Texas, June 8 and 9. It's the biggest crypto event of the year for us. And check this out. In addition to incredible content, you're going to get to go tour a Bitcoin mining farm. It's going to be an awful lot of fun, really informative. You'll get to meet a lot of other advisors who are learning about this as you are. Early bird registration expires at the end of this month, December 31. So go to DACFP to enroll right now and register for that event in August, or in June rather. And then really build your knowledge by attaining our certificate in blockchain and digital assets, our online 11-module self-study, self-paced course, 13 CE credits. The course is just $549. And if you talk to Invesco, they might be able to facilitate a way for you getting this program even cheaper. Half the course is on the tech, the other half on practice management, the investment thesis, the opportunities, regulation, compliance, taxation, and most importantly, how do you talk to your clients about this? So I encourage you to get your certificate in blockchain and digital assets, register, enroll, learn more at DACFP.com. Thanks again for joining us on the program today. I'm Rick Edelman. Always a pleasure to present you this content. Thanks again to Ryan McCormack of Invesco. Have a great rest of your day.